Welcome back to the Ascent Trading YouTube channel, and today it's going to be more of a technical video, and we're going to be talking about what moves a market. Now, if you want a more in-depth look than this and a longer scripting of this, go take a look at our course in our Discord. I'll link that down below. And basically, in our course, we go over it a lot more in depth. I show you how I kind of mingle it into my strategy and how we can use what moves a market to our advantage when we're trading. So today's video is going to go over more of the broad sense of what moves a market and how we can track what actually is happening within the markets, within our trading days, within our trading weeks, and all of that. So basically it's going to be a conglomerate of relevant news sources. It's going to be a conglomerate of time framing, buy and sell orders, a lot of order flow as well. We're going to talk about every indication that moves our chart in the upwards or downwards direction. So just to start off with some basics on how the market actually moves, our markets move on an exchange level. So this means there's constant buy and sell orders at a certain price point that constantly shifts the market up and down. Now, these are all different types of sizes and the inflows of money are all different, but the real point to get here is that investors have to be buying majority or selling majority in order to get a market moving in a certain direction. When buyers and sellers are kind of stagnant and they're just going against each other at the exchange level, that's when we see chop in the market. That's where we see the barcodes form. That's where we see price not really giving us follow through, kind of just chopping around doing nothing. And markets move a certain way off your indicators as well. Now, I know that moving averages are very good indicators for long-term moves in the market. Your 50, 20, and 15 SMAs, EMAs, whatever you want to call them, all have relevance to the way the market moves, right? Those are your idealist kind of average pricing on where the stock should be overall to the broad market. And that can be useful if you're looking for bounces and rejections or basically just capitulation in between some of those ranges. And what's really important here is that when we're talking about, ranges and all that, I use VWAP constantly. VWAP is, I believe, the mid price of the trading day. And if we go into, let's say, a 15-minute chart, so let's go over to the charts and take a look at what I mean by VWAP. So moving straight into VWAP, VWAP is the medium price off the opening print. And what we're looking at here is usually off the open or off the close, you will see an exaggerated move of VWAP. It will be vertical, it'll be straight down or straight up. And what that is that's just adjusting the overnight VWAP to the current morning VWAP. So when we're trading VWAP, basically what we're doing is we're watching a median price of the stock. VWAP projections are a good confluence to our trades. VWAP acceptance is a good confluence to our trades as well. So the only indicator that I use on a daily basis with all of my trades is definitely VWAP, simply because it's median price. Another thing that moves this market is news, right? We have high ticket news that pretty much comes out every day, whether it's CPI, PPI, non-farm payroll, it's all relevant. And even with, newly introduced news, especially now that Trump's in office, his Truth Social or his tweets can make the market move 10, 20 points in a second. I've seen it happen before with the tariff situation. So when we're talking about news, we're talking about these red folder newses, right? Now, these aren't obviously ours, these are Canadian, but you want to make sure that you're paying attention to all the USD sort of red folder news, because that's really important to our trading. Of course, all of these do usually come in before the market begins and could definitely kind of sway the swing of order flow throughout the day. But what the best part about this is that this gives us a calculated rate about which news can come out when. Sometimes there's news at 10 a.m., sometimes there's news at night 8:30, and then sometimes there's a random tweet from Donald Trump that makes the market move exaggerated. Recently we've seen a lot of big news catalysts come out of the market due to the Iran war. And that's kind of a downside to us traders because it's not scheduled news. It can come out of nowhere. So we can definitely get screwed on our positions by not knowing what's happening geopolitically. So now the main thing that actually moves the market is going to be your volume and volatility. Volume is the greatest indicator that we can look at simply because it tracks how much money is actually inflowing / outflowing in the markets. Volatility is just another word to saying how sporadic the market can move based on news events, based on IV, and based on a bunch of other factors. We can use both of these things to become great traders in the market by kind of channeling and making sure that we're aware of these indicators, right? If you're watching volatility, you're probably watching the VIX or the VIX with two X's. And if you're watching volume, well, you're going to be watching this little indicator at the bottom of your trades that tracks volume, right? You can see that the abnormal volume days are usually where we start getting a reversal. And, you can really see the chop ranges in here, especially if I go to the daily chart. You can really see where we kind of start really rebounding when you get in the upwards of 100 grand or 150 mil worth of volume. You start to really realize that that's kind of where we bounce, right? And sometimes it can equilibrium off, which is fine. That happens all the time. But what we really want to focus on is volume, order flow, what we're looking at in the markets to kind of calculate our trade. What's the skew, right? How many people are selling the market? How many people are buying the market? And where are we sitting with our price targets? So realistically, when we're talking about what moves a market, we want to be as most focused on what is moving a market as our trading setup is, right? Because it's all confluence. If we're taking a trade that is going short, we want to make sure that all of our indicators and all of our market movers are indicating that it's time to go short, right? We're not shorting when we're getting a shit ton of buy volume. We're not going to short when we're stuck in an equilibrium that is moving, kind of chopping to the upside. We want to be making calculated moves based off of what other people are doing, right? I always say this: big money moves the market quietly. Meaning you'll never see big money inflow, outflow from the markets. You'll just see the move happen in front of you and you'll hear about it later. And that's kind of the bitch about this skill, right? Is that we as traders have to be very focused on what is in front of us and what is being told by us in order to make a thesis, because the big guys upstairs already know before it happens. The next key indication on what moves a market is time framing. Now, we all know that there's certain times within the market that price moves kind of stronger than others. And kind of going over those time frames, it's going to be 8:30 where our news event happens. It's definitely going to be around 9:30 when open happens. 10 a.m. if there's news at 10 a.m. And I would say the close, around 3:50. I'd say 3:45 to 4 o'clock. Even 4 o'clock to 4:30 realistically if you're trading extended hours. But time frame trading is kind of a valuable strategy. You could definitely use it to your advantage. But when we're talking about using times to our advantage while in trading, I always so I trade normal US NY open hours, right? I trade from 9:30 to 4 o'clock, if that. So realistically, like when I go to trade, I usually wait a good 10, 15, maybe even 30 minutes before or after the market opens just to see how price moves, right? I don't want to enter if we're going to be chopping the whole day. I don't want to enter on a shitty move right off of open because I'll get stopped out easily. I want to give time for price to kind of congest, adjust, make a morning move, and then I can, kind of go with my analysis from there. But I do know some traders who trade a strategy based on time, and that's fine and all. That works great for most people. For me personally, I don't really like that. It doesn't give me a lot of confluence. It doesn't give me a lot of confidence. It just kind of is a gamble at the end of the day. And historically, price moves better within, 9:30. Let's look at Friday's price action, right? Because Friday is a great indication on trading time. If I go to Friday's price action on the 5-minute here, and I'll turn on my night session so we can see the exact price action, right? So this is Friday's price action. Basically what happens is we get a beautiful move in the morning, right? A nice rejection pattern gets us down lower. And then after 12 p.m., everyone walks away from the trading desk on Wall Street. So what do? We go completely sideways until about 3:45, 2:30, 3 o'clock-ish, and then we start making another move downwards to close the session out. What's great about this is that we can kind of tell when price is going to make a move, right? We see the first move being made at about 10 o'clock. Then we see the second move being made around 10:30. Then we see the third move kind of just whittling away from, 12 to about, 4 o'clock. And That's great and all, and we can kind of calculate our trades off that. It's just not the most confident strategy to use, right? I wouldn't use it, and I wouldn't bet my life savings on it simply because it's not a reliable strategy. I haven't back tested enough, I haven't learned it enough. But what I look at is I look at time frame within Confluence, right? If we get a nice move at 9:45, I know that's pretty confluence to a trade setting up at some point, right? Realistically, in today's day and age, I have been simply just taking lower highs or higher lows above or below the opening print, and that's been very profitable in this market. It's been very useful, saying with all the tension from Iran, and it doesn't really involve time frame. It just involves kind of watching the market and basing your trades off of my key levels, which is just my strategy in its entirety. So time frame market movement is relevant to what we're doing. It's just not relevant to an actual strategy. Now, shifting back to the news source of moving a market, when we're talking about looking at breaking news and fresh news that has just come out that's not scheduled like PPI or CPI, we're talking about news catalysts coming from Truth Social, straight from Donald Trump in the White House, or even if you're tracking Unusual Whales on Twitter. These are all sources that we can use to keep relevant news in our minds in the market. I have notifications on for all of these sort of things. Truth Social, X Unusual Whales. There's a Snorlax Unusual Whales as well that I have notifications on for. And it's just good, relevant knowledge to have throughout the trading day. I like to have it always so that I know if price makes a big exaggerated move, there should be a headline coming across my screen in the next few minutes. And from there, we can know everything we need to know. And the best part about Unusual Whales on X is that it's free. All you have to do is follow them, turn on post notifications. And the best part about it is it's not just market news intraday. It's foreign market news. It's overall geopolitical news. It's earnings calls, revenue, and EPS and all that. So it's extremely influential to what we're doing and what we're trading, especially if you're looking at single equities or just the broad market in its entirety. On the other spectrum of channeling kind of news and stuff, we talk about the Federal Reserve data. Anytime that you see a Fed chair speaking, or even an FOMC meeting or FOMC meeting minutes, that's all high relative news to what's happening. Recently, now that Trump's gotten into the presidency, we see that rate cuts and just the way inflation's going and everything is very Fed reliant. So it would be stupid not to realize that the Federal Reserve has such a high impact on the markets, right? And we can see that with FOMC days. If you go back and you look at any FOMC day, you'll see as soon as the meeting starts and it goes to conference afterwards with J-Pow, it is just total anarchy in the markets. There's a huge exaggerated move, up, down, left, right, center, whatever you want to call it. Usually it's priced in, sometimes it's not. It really just depends on where the Fed sits. And I never trade high impact news, PPI, CPI, FOMC, whatever you want to call it. But I know people who do, and let me tell you something. It is so hard trading during FOMC because you can know that they're going to cut, pause, or add rateage, but you don't know what they're going to say afterwards. And that's kind of where people really focus on buying or selling in the market, is when it goes into that sort of Q&A with J-Pow after the actual meeting. And what's really important to carry there is that all companies run off the Federal Reserve, right? The more you raise rates, the harder it is to borrow money. So companies invest less and consumers spend less. Stocks may fall. Lower rates, it's the opposite. You can buy more, you can spend more, you can borrow more, so money is more of a tool than it is a asset. And what we're kind of realizing now that the market's kind of falling out of this huge balance range on our daily chart, is the fact that people have all this money on the side that they're really not getting into the markets yet. They're kind of just letting it all sit around, which is fine. That's great. Having money on the side while the market tanks is never bad. It's just meaning that you're waiting for a good buying opportunity. But what really is important here is the consumer rate of spending, right? People are never going to stop spending their money, right? We all have necessities. We all need to buy groceries, gas, food, beverage, water, whatever you want to call it. And what's really important is that when we're in a huge downdraft, especially with oil rising and stocks falling, people are looking for that buying pressure. People are looking for a good spot where news is starting to get better, stocks are starting to turn around, and the index of buyer confidence is sort of moving in the upwards direction, right? So the Fed can influence that a lot, and so can just the markets in itself. So when we're talking about what moves a market, there's news sources, there's volume profiles, there's time frames, but most importantly, it's the market itself. What moves a market is the chart in front of us, right? That's why I always tell you guys, trade the chart in front of you. Don't trade a hypothetical. If you're trading the chart in front of you, you are seeing the live price action. You are seeing the live reaction of our key levels. You are seeing the live productivity of what the market is doing and how investors are feeling about the current price. And that can be the most beneficial to us because that is real-time data. That is what everyone is looking at that moment, and that's what helps us make our trade. We're not trading a hypothetical. We're not guessing. We're not entering too early. We're trading the move that presents itself based on the confluences of our news sources, of our red folder news, of our indicators, and everything. And the most important part to take away from this is that you don't want to rely on these indicators or these news sources to make a trade. The chart is the most important thing, right? The chart is number one. The chart will show you the way. The news will help the chart move. Anything below that is kind of just white noise. We really don't need that. But realistically, in all importance, news catalysts, extremely important. Volume, extremely important. The chart in front of you, the most important thing. That is the one thing that your eyes should never leave, right? It's great hearing what's going on geopolitically. It's great hearing about the red folder news. It's great hearing about earnings calls. But it's not as good as seeing the move getting made in your choice, right? In your trade, right? Again, if we go back to Friday's date, we can see the shorts that I took, and I'll go to the 1 minute on this because I believe that's where I got my confluence from. We didn't have any news going into Friday besides some geopolitical stuff with Iran, but what we had is we had a VWAP projection right here, which led to a lower high underneath the opening print and a inversed 1 minute gap, which is right here. So what's really important here is that there was no news catalyst behind it. There was no Fed talk behind it. There was no really time frame behind it. It was just the chart that's set up in front of us. And this was a no-brainer trade to me. It was an A-plus setup. Realistically, I was only losing, I think my stop loss was at like 20%, and it was straight profit. There was no uptick into drawdown, which is great. We love seeing that. But again, there was no news source behind this. There was no planned red folder news. Realistically, the only news source that came out on Friday was just geopolitical stuff and Iran saying that it wasn't backing down from a war, which is bearish news in a sense, but it wasn't really the main indicator of the market on Friday. So to tie it all together, when we're talking about news sources and we're talking about what really moves a market, it's realistically the chart in front of us that really moves the market. It is the exact thing that we are trading. It is the exact thing that we are looking at. So all in all, I think that about does it for today's video on what moves a market. I hope that you guys took notes and that you took this with a grain of salt because obviously I don't trade news events. I don't trade time frames. This is very out of my strategy. I use all of these examples as confluence, and that's all I can give you guys. So thank you for listening. I appreciate your time. Stay green this week, and I will see you in the next video. Thank you.